Good morning, traders. Welcome to the Phoenix Blue morning update for Friday, the 18th of March. I'm Tom Collier, and I'll be taking you through yesterday's markets, the Asian markets overnight, and looking at our current open positions, potential new orders, etc. for the day ahead. We'll be focusing today on the question, how long will US dollar weakness last following the FOMC announcement on Wednesday night? Look at the news first from yesterday. Two major central bank announcements, both the SWIFT and the Bank of England, maintaining rates at their current levels. In the case of the SNB, minus 0.75, in the case of the pound at 0.5 positive. The voting on the British pound vote was unanimous, all 9 voting members in favour of holding rates. Over in the States, we had some positive Philly Fed manufacturing index numbers and some on-forecast unemployment claims. Today, things to watch out for, we've got core CPI and core retail sales figures from Canada, and then at 2 o'clock, US dollar preliminary consumer sentiment. So over to the Asian markets overnight. We've got a weakening dollar. Naturally, what we're seeing in response to that is a strengthening in the Chinese yuan. The Chinese government have committed to allowing the yuan to strengthen against the dollar on a natural basis. We saw that the first session after the FOMC announcement. We've got a long bearish continuation bar, followed by another one yesterday, so significant follow through there. What's it meant on the Shanghai Composite, the composite of the Chinese equities? Well, immediately after the session after the announcement, we had a strong bullish day. Overnight, we had a big opening gap. And then a smaller bullish day, but we have a close above these recent highs here. Could this finally be a recovery of Chinese stocks? Japan, here we've got the Nikkei 225. Mark talked about this rising wedge yesterday. Overnight, we've had the expected break below that wedge. We're seeing weakness in this market because decrease in the value of the dollar naturally allows the yen to increase, which makes circumstances difficult for Japanese, or more difficult for Japanese business. I've just dropped in the S&P here just to show the opposite. This is the weekly chart of the S&P, and we've had, since the announcement, we've been bullish. The announcement basically said that, or the expectation is, we'll see maybe 2 rate rises this year rather than the hoped for 4. That makes the marketplace more suitable or better for American business in terms of their costs and lower interest rates. So we're seeing a bullish move there. Over on the Japanese yen, we've talked about this level here where we've seen Bank of Japan intervention. We believe we traded long here with success. We traded long here with success. Yesterday we had an order at the same level as we did for these 2 trades at 111.15. Unfortunately, that trade was stopped out. We are now back in this market with an entry at 110.90 with a slightly larger stop to allow for volatility. And we have another order should price come back and retest the previous level at 111.15. So just to clarify, we anticipate Bank of Japan intervention. They have drawn a line in the sand at this sort of level. We're just taking advantage of that. Over on the US dollar, we've been talking for quite a while about this box here. This is the weekly chart now. This box we saw as price within there as neutral. Following the FOMC announcement, we can see a significant break short. We're now seeing dollar weakness. I've highlighted 2 levels at $94 and $92.50 that, as I see, is significant as the next stopping point. I can only expect that, bearing in mind we still have monetary policy divergence between the US, who maybe not raising rates quite as fast as the marketplace had hoped, will still be raising rates this year. We see this as a positive move. The dollar will pull back and then get some momentum when the monetary policy divergence kicks in. Will it be this level at 94 or will it be further down at 92.50? I've related that over on the Euro US dollar weekly chart. I've got two zones here which I believe coincide with the levels on the dollar index. Same thing applies here. We'll be looking for opportunities to get short from either of these levels. Our bias will remain bearish longer term on the euro unless this trend line should be broken and or this level here. Okay, over on the New Zealand dollar, we had an unsuccessful trade around 66.50 short here earlier in the week that was taken out by the dollar weakness. That's the US dollar weakness. Prior to that, we had an order in at this 68.60, 68.70 level. That order we reinstated yesterday. It triggered overnight. We're now short this market. We've already got a stop at break even, and we've had some profits off the table, trading cautiously whilst the markets find their feet again after the recent Fed announcement. Conversely, on gold, we seem to be confined now within a range here. We will not be looking to do anything with gold until we either break out and retest this level here, which would return to a bullish sentiment. We had anticipated a longer pullback. That hasn't happened. If we do get priced below here, we will be looking for a level maybe through here to get back into this market, because again, our longer term, our bias is bullish gold. Quick look over at our commodities trade on cocoa. We've been in this quite a long while. Entry and stop now at this level. We've had money off the table. We had an entry in at this level here. We were looking for the market to pull back. We had what looked more like, earlier in the week, more like a rising wedge, and we were looking for a break down to this level before taking the trade. That's now, through this week, morphed into a channel, so we'll be looking for opportunities to get back into this market on a retest of a level and channel, potentially maybe as soon as this level here. We won't be looking for that today. We'll be letting the market settle and going through to next week. Having analysed over the weekend, we will look at what's available to us in terms of levels at that point. Okay, another fascinating week draws to a close in the markets. I hope you protected yourselves successfully with your stops, etc., through the news events. If you'd like to know more about how we trade here at Phoenix Blue, if you'd just like a chat with us, or you'd like some more information, come and see us. Info at Phoenix Blue is our email address. Any questions whatsoever, direct them there. My email address is tom@phoenixblue.co.uk if you have any questions about this specific video. Okay, thank you for watching, and it only remains me to wish you a great weekend. Thank you and goodbye.